Now, there are some interesting new numbers tied to the condo market in Toronto, which we're tracking, where, according to an industry report, more than 75% of investors with mortgages on newly built Toronto condos have had negative monthly cash flows in the past year, up from 52% in 2022. Note that keyword investor, because when it comes to building homes in this country, one of the key considerations for a builder is investor demand, and it is impacting the building outlook for big developers such as Minto Group. Michael Waters is Minto's CEO, and he joins us here in studio. Michael, nice to see you.
Nice to see you.
Maybe you can just walk us through the dynamics as a big builder with all sorts of projects under your belt on what goes into the decision to actually make that project to go.
Yeah, so I mean, we think of a typical urban development opportunity. You are looking at condo or rental. For a condo project to proceed, obviously you need to get the approvals in place. But a key element is achieving sufficient pre-sales. You need those pre-construction sales as a critical precondition for obtaining your bank construction financing. Without pre-sales, a project is just not going to start. And so right now, all developers are looking very keenly at where the investor market is, because that is just such a critical component. Other elements, of course, include supply chain, hard costs for construction, and those sorts of things. Interest rates, big factor in our development pro forma as well, and a big driver of cost.
So when you're lining up pre-sales, it might be someone who wants to live in that condo, but it also might be someone who is familiar with investing in real estate and is looking for an investing opportunity.
Yeah, that's typical. In some buildings, they skew to higher investor component because of the suite mix, suite layouts, their locations, demand drivers for rental housing, maybe in the proximity. And so it's not unheard of for some buildings to be well over 70% in terms of investor traffic and volume driving the pre-sales.
Really helpful context there, and it gets to this bigger question that we're always having in Canada about, do we have enough supply? And there's all these conversations taking place and efforts underway to try to solve the demand-supply issue. But as a builder, what are you thinking about? What is standing in the way of being able to create more supply in the marketplace? I guess it's sentiment around, investors wanting to be part of a particular project, but really, what is the challenge with this kind of development for actually developing, actually creating new supply?
Well, we've touched on one, which is capital flows. We need capital flow into the sector, whether that's investor dollars investing in a pre-sale or whether it's institutional capital putting money into housing, whether it's REIT stocks who might be funneling money into development, or whether it's pension funds or other forms of institutional capital entering the space. But approvals are a critical factor for us. And, Canada's not known for its swift approval timelines. In fact, a recent study by the World Bank ranked Canada 33 out of the 34 OECD countries for timetable to get a building permit. So key factor for us as developers is getting those necessary approvals and entitlements in place. Supply chain, hard costs, availability of labor and materials, that's another big factor.
So when you bring up an issue like red tape and your industry peers bringing it up as well, what's the response you get to that? If everybody feels like to solve the supply-demand imbalance, we need more housing.
Yeah, we see governments, I think, well-intentioned, wanting to improve the situation. The reality is that we have three levels of government in Canada that impact development approval timelines. We, of course, have the federal level, and we've seen great policy responses in the form of the National Housing Plan. We've seen provincial governments like Ontario, Bill 185, which was designed to cut red tape, speed approvals. And we see it at the municipal level. And they all use a combination of tax policy, infrastructure funding, and other tools to try and speed the process. But the reality is we're just not seeing enough movement at this stage. It's early days, but we need to do a lot better.
And what do you think the net result for Canadians who are trying to navigate their own housing-related costs? What's the net result of that? Because, it's funny, we've been covering inflation.
Right.
And interest rates being higher creates mortgage cost growth, which is a form of inflation, but it also limits the ability of people to get into the housing market as buyers. So we've seen rent prices higher. So that's been another form of inflation. So for people who are renting, if you as a builder have some headwinds in front of you, what does that mean for rental prices?
Well, we've seen rental prices surge, obviously, over the last several years. Rentals.ca just recently published a report indicating to the end of June, we'd seen rents nationally for all types of rental housing surge 7%. That's a figure well in excess of inflation. We've seen housing affordability for home ownership, recently reported by RBC, is at levels, historic highs. I mean, affordability is very, very poor for all types of housing. And it's a function of surging demand, driven by population growth, and a dearth of new supply coming online. And unfortunately, this weak condo market in places like Toronto presages what I think a situation may actually get worse. As pre-sales don't materialize, construction starts on condos won't happen or will get delayed, and pre-sales today are condo deliveries 3 and 4 years into the future.
I mean, we're almost out of time, but you guys have been committing to building for a very long time, so you've powered through a lot of uncertainty over the years,
right.
but you're sounding somewhat uncertain right now.
Yeah, we've been in this business for, 7 decades, so we've seen ups and downs. We've seen things, go sideways for sure. I think Canada's development sector is well capitalized. I think we have a well-capitalized banking sector. So I have no doubts about the ability of major developers to get through this rough patch. But it's not going to be without some pain. Certainly for consumers looking for a home, they're going to be paying more. And certainly I don't see a quick end to that situation in the near term.
Okay.